So how do you even get a credit score? What credit cards you can use to start building new credit? And what the heck is piggybacking? I'm Joe Chavarria, and this is another episode of Cup of Joe. So today, the topic at hand is how to build credit. This is the ultimate guide to building new credit. And before I dive into the content, I want to remind all my listeners, all my viewers to like, share, and subscribe to my content. And if you are building credit for the first time, if you're brand new to credit, you're starting the process of building your credit report, please comment yes below if you are, or if you have credit already and you're just kind of curious to how to build it up, or maybe even how to repair it. Comment no below if you're not new to credit, so I just kind of know how my audience is resonating, how this information is resonating with my audience, so I can always tailor it to fit this my information to fit what my audience really cares about. Okay, so now to the topic at hand: how to build credit. So the very first thing I want to talk about is how do you get to the point of having a credit score in the first place? So to answer this question, we first need to decide what scoring model are we talking about here. So you have Vantage and FICO, which are the two main players in the credit scoring space. Vantage is fairly new. FICO's been around for a long period of time. Vantage is kind of the new kid on the block. FICO is probably the most trusted, most commonly used scoring model. But I want to talk about both because you're going to see both in your lifetime. So Vantage scores are the scores you're going to see on Credit Karma or on most websites. That's typically most websites, most online websites that are direct to consumer provide Vantage-based credit scores. To get a Vantage score, it's actually pretty easy. All you need to have is really an identity, for one, and two, an inquiry. So with one inquiry, you would have a Vantage credit score. Now, FICO is a little bit different. With FICO, which is a score that right now really matters, you need to have at least one open trade line. And by trade line, that can be like a credit card or a personal loan, some type of account that you're paying on that's reporting to the credit report every month. That's basically a trade line. You need to have at least one trade line that's been open for 6 months with 6 payment cycles. So whether you've made 6 payments or if you've had it open for 6 months, made a payment here and there, but the payment history itself needs to have 6 reported payment cycles in order for your FICO score to be generated. So it's very important that you distinguish between the two, because you may just not have any credit, but Credit Karma is giving you credit score, and that's because that's your Vantage score. You don't really need much to get a Vantage credit score. And then you may have, you go to a bank or you go to a credit union, you try to get approved for a loan, and you're like, oh no, you don't have any credit. You don't even have a credit score. They're just like, you're like, what the heck? I just saw my score online. How can it be? This is the main reason why, because the scoring models that are at play, Vantage versus FICO. So now what I want to talk about is how to build credit, right? Say if you're brand new to credit, how do you get a trade line? How do you get accounts on your credit report if you're brand new to credit? Let me start off by saying this. You probably don't want to spin your wheels trying to apply for credit cards left and right, because most of the banks, like let's just say the big banks that are out there, I'm not going to name them, but the big banks that are out there that predominantly offer credit cards, that own the credit card space, they're usually not going to approve somebody who has zero credit, basically no credit, because their underwriter and their approval process is actually pretty automated. So if they don't see any file that's a thin, if it's a thin credit file or no credit file comes back when they run the credit report, then more than likely it's going to be an automatic denial. So that leaves people with a challenge, right? How do I get credit? What are some steps I can take to start building credit so I can get a credit score and start getting approved for these other things? Because maybe you have a great job, maybe you have great income, maybe you're responsible, but unfortunately you're not able to demonstrate this because the banks aren't taking a risk on you because you're brand new, right? So these are some things you can do to start building credit. So if you're new to credit, I would recommend starting off with a secured credit card. Now, secured credit cards, there's secured cards and then there's unsecured credit cards. The difference between the two, unsecured credit cards are typically the credit cards you're most familiar with that the big banks and the credit unions offer. This is where they base the approval on your credit, and they're just giving you the line of credit or the credit card solely based on your credit. There's no collateral that secures the credit card like any kind of, deposit or funds or an asset that actually would secure that credit line or that credit card, therefore making it an unsecured credit card. There's basically no collateral that's put up either by the bank or by you to secure that credit card. Those are your unsecured credit cards. What determines the approval is how strong and how good your credit report and credit score actually is. Secured credit cards are where you, the individual, you're taking the risk on yourself. You're securing that credit card with your own money. Typically, secured credit card companies that exist, they'll require like a minimum of a $200 deposit. The funds, your funds, they would go into a non-interest bearing savings account at that bank. That bank would then use your own money to borrow against and give those funds in the form of a credit card. Okay, and this credit card, you can be used anywhere. It's not like you only use it at that bank. It's used wherever the card issuer is accepted, which could be Visa or MasterCard, which is typically accepted everywhere. And the information, that account, that credit card information is what gets reported to the credit reporting agencies each and every month. So your payment history gets reported, your credit limit gets reported, the account type, the account number, partial account number, by the way. The date that it opened, the date last active, all that information on that one solo account will get transmitted to the credit reporting agencies by that bank or by that lending institution. And if you're basing it off of FICO, right, with FICO, you need about 6 payment occurrences or 6 months to pass by with that one account in order for the credit score to be generated. Once that 6-month mark hits, then you would have a true and actual and genuine FICO credit score. Okay, and that's going to allow you to start getting approved for some unsecured credit cards, and I'll talk about that here in a bit as well, some suggestions around that. So that's pretty much what a secured credit card is. It's guaranteed approval. There's no credit check. You're taking a risk on your own self and telling the banks and telling the lending institutions like, hey, I know I don't have any credit. I know you guys don't want to take a risk on me. I'll take a risk on myself. And I just need some kind of credit to demonstrate some good credit behavior, make myself established as a credit-worthy individual to generate a credit score to get approved for other things in the future. Some banks that are out there will actually convert your secured card into an unsecured credit card after a certain point at a certain time. You probably want to ask your bank or your credit union if they do that. If you're kind of deciding or kind of shopping around which bank or which credit union you don't want to go to for a secured credit card. Find out if they'll convert the secured credit card to an unsecured credit card at some point. And if every bank and every credit union doesn't do that, or the ones in your area don't do that, then don't let that stop you. Still get yourself a secured credit card because you need to do something to start building credit. Now, for some unsecured credit cards to kind of like continue building credit off of that, the secured credit card is great, right? That's the starting point. But you really need about 3 to 5 other accounts, other revolving accounts to really strengthen your credit score and make it not so thin, right? Make it more of a thick credit file, right? The thicker your credit file is, the higher your score, theoretically would be, and the more accounts that you demonstrate, you can handle, the less of a risk you actually appear, which therefore your score is going to be a little bit higher compared to just having one account that's paid on time. If you have 3 to 5 accounts that are paid on time, theoretically this is going to make your credit score be a little bit higher because you're less of a risk. So when it comes to unsecured credit cards, there's a couple companies that I recommend to use to get approved for some unsecured credit cards when you're starting to build credit. Again, you want to have had the secured credit card open for a couple of months, made some payment histories, verified your score, because when you start going to unsecured credit card companies, again, they're going to use their automated process to determine approval. So you want to make sure a credit score spits out, you want to make sure that a credit report populates, you want to make sure that the information is transmitted on their underwriting process so you can get an approval like that. So 2 companies I would recommend to start off with when building credit, going from a secured account to an unsecured account. Credit One Bank, they're not sending us a check for this information, by the way. I wish they did, but they do not. So Credit One Bank is a great credit card company that they usually have a lower score requirement. I think it's 560 on a credit score requirement. And so, even if you're building credit for the first time, Credit One Bank is a good credit card to get from going from one account to a second. And it being an unsecured credit card, Credit One Bank's a good company to go to. Also, Capital One is actually not that bad. So I would recommend going secured card first, Credit One Bank next, and then following after that, maybe spacing it about 3 months apart. After that, going Capital One. So you have about 3 accounts now. You have your secured card, you have your two unsecured credit cards, which makes it a total of 3. Now, a question I'll get asked from time to time is, now that I have 3 accounts, should I just go ahead and close out that secured card? I really wouldn't recommend it. I would recommend that you keep that account because that's your first account you have open. So the longer you have credit, the better it's going to be, because length of credit is about 15% of your score. So the longer you have credit, the longer your average length of history is, the better that's going to be for your credit score as well. So I wouldn't recommend closing that account out, even though if you do close it, the bank will give you your money back if it's a secured card. And that's why I'm suggesting try to find a bank or lending institution that may convert the secured card over to an unsecured credit card, meaning they'll still release the funds back to you, but then now they're keeping the credit card open. So last but not least, I want to talk about piggybacking. So if, let's say, secured credit cards are not the option. Let's say, you don't want to get an unsecured credit card. Or you do want to get an unsecured credit card, but you don't want to go through the secured credit card process to get it. There's an option called piggybacking. Piggybacking, you got to be careful with this. Piggybacking, I would recommend getting added to a parent's account or a spouse's account. And what I mean by that is, let's say that you're a student. Let's say you're 18 years old, you're a student in college, and your mom has a Chase credit card that she's had open for 10 years, perfect payment history, never late, large credit limits. You can get added. You can ask your mom to add you to that account as an authorized user. You probably want to have your mom verified, or have your parents verify, or verify with them to make it easy. Verify with them that Chase or whatever bank that they have, verify that they will report that same payment history onto your credit report, and find out if they also would backdate in the reporting. So let's say it's got 10 years of history. Find out if that 10-year history or all that payment history would then be applied towards your credit file as well. The banks and the lenders, they're not very resistant to this. They're very open about doing this. So you can do it that way, but I would recommend that it be someone like a spouse or a parent. And the second thing to verify is that their account is in good standing. Don't get added on to a maxed out credit card, or don't get added on to a credit card that has very bad payment history. That'd be counterproductive. Make sure that the payment history is perfect, never late. Make sure the balance is low. I'd like to see it about 30% or lower. So if it's a $1,000 credit line, make sure the balance is less than $300. And of course, make sure that that person is okay with it, and make sure that the bank or the credit card company will report all that information to your credit report as well. Because they can offer you an authorized user, which means you just get access to it. You get your own credit card as well, and you can use it. And you can, you have authorization to call in and inquire about the account, but you don't get any of the credit reporting. I wouldn't recommend doing that. Make sure you get the credit reporting benefit, because that's really what you need. So another trick is get added onto that account, piggyback on that account, get your credit score, especially if it's an account that's been open for more than 6 months, then you should get your FICO score, and then go get some other unsecured credit cards of your own. Maybe the Credit One Bank, maybe the Capital One, and maybe a Bank of America account or Wells Fargo account, maybe one of the bigger players in this space, maybe a Citibank account, and start building some of your own credit. And once you have about 2 or 3 accounts of your own credit cards, then probably go ahead and get yourself off mom or dad's credit card or off the spouse's card, because you don't have a lot of control over that, right? Your own accounts you have more control over. Not saying that, historically, if your parents have always paid on time, it's very rare and unlikely they're going to miss a payment, but you never know. Life can happen, something can happen, and you don't want that information that's on your credit report to then kind of bring your newly built score, newly protected score down. So you want to kind of use it for a temporary purpose. Once that purpose has been fulfilled, get yourself off that account, you have some of your own credit, and then just continue on moving forward. So that's my time here, guys. This is the how to build credit, the ultimate guide. This is a great starter process to help you start building new credit. Now, if you are new to credit, you need some help or some recommendations on some credit builders, I will put a link in the description below to a website that's got about maybe 3 to 4 different secured credit card companies on there you can look at, and you can kind of vet them out and look online and set one up. I'll put that link in there as well. And then if you just need some information on, building credit or how to repair your credit in general, again, I'll put a link in the description below. You can click on schedule a free consultation. My team and I be more than happy to dive in closer on your credit report and put together a good game plan to get your credit going in the right direction. Again, I'm Joe Chavarria. Thanks for watching this video, and I will see you on the next one.